I've covered this before, and who knows, I'll probably cover it again, but it's so important for you as a trader that you really can never cover it too much. So let's dig in. Hey, it's Clay Trader at claytrader.com, and this topic I want to talk about paper trading and what I like to call paper trading power. Like I said, I've talked about it before and I'll probably talk about it again because it's something that is very beautiful. However, it's very dangerous at the same time. So I want to dig a little bit more into that and actually share one of the tools I've used in the past. And I can't say I've used it anytime recently, but I want to share it. And if you want to use it in your trading, then you are free to do that. So let's just first talk about a couple broad concepts here. And the first beautiful thing about paper trading is it's risk-free. Now, what is paper trading? Real quick, you're just pretending. You're putting on your imagination cap and you're pretending that you're buying, you're pretending that you're selling. But the thing that's tricky is that the pretending can get you in trouble because sometimes you start to assume things more so in your favor, but I'll get to that later on in the video. But first part, like I said, risk-free. There's no real money. It's all imagination, it's all pretend. So you're not going to lose any money. The second big thing, it's going to allow you to fine-tune your strategy. Now, if you're somebody sitting here and saying, yeah, strategy, I think I got a strategy. My strategy is to make money, right? If that's you, you need to find a strategy. But when you find one, that's only kind of half the battle. You need to fine-tune it. And there's nothing worse than fine-tuning it with real money on the line. There's no need for that. You don't need to lose real money as you're fine-tuning, tweaking your strategy, getting it to where it needs to be. And then third, and the best one, and these two basically feed into it, is it's a great confidence builder. There's nothing more nerve-wracking than hopping into a trade without confidence. It's one of those areas where if you've never traded a stock, you probably can't relate to it too much, but if you have traded, you know the feeling when you click the buy button and then you start to see the numbers flash, you're making money, you're losing money. I mean, without a system and strategy in place, it can be very, very hectic, but confidence can be great for that and help you avoid, the panic inside your head. But in order to get this confidence, a great way to do it is not to make money, because if you're just trying to make money out the gates to build confidence, you're going to lose money because you need to, have a fine-tuned strategy. You need to understand how your risk management systems play out. But in order to do that, you gotta test things out. But you don't have to test things out with real money. You can test them out in a risk-free manner, and that's paper trading. So what I want to do now is go to my screen top and show you a spreadsheet that I use, and then how you can implement it as you're trying to gain confidence as a trader, fine-tune your strategies, and of course, it's all risk-free.
Welcome to my desktop. Here is the spreadsheet that we're going to go over, but the main theme here that I want to get across is making our lives difficult. Why are we trying to make our lives difficult? Well, real trading is already hard enough. You have your money on the line, emotions start to creep in, things are just different. Any way you slice it, things are always going to be different from paper trading to actual trading. And our goal is let's try to make it as smooth as a transition as possible. And the best way to do that is to make our lives as difficult as possible on paper when we're doing this. The problem I have with the virtual trading and just kind of the way a lot of people do the paper trading, even if they're using the old school method of a note, pen and paper, they make their lives too easy. They make too many assumptions in their favor. This spreadsheet is designed to totally flip that around. We are making everything against us, and if we can show profits with this sort of system, then that just increases our likelihood that, okay, when we do actually get into real trading, our odds of success should go up that much more. Now, it's still not going to be a flawless, totally perfect transition, because real trading is going to be different. But the people that make their lives too easy during paper trading, they just have way too hard of a time when you get into actual trading, because now all of a sudden all these assumptions that they were making are no longer coming true. So we're going to flip that around and make our lives difficult. So what I want to focus on here is reality and then paper trade. So there's two key colors here: orange, gold, whatever you want to call that, and then green. One of them is what we want. So we're looking at a chart setup, let's say, and we say, you know what? If this was a real thing, if this was reality, I would want to get in at a certain point. But in order to get in at that certain point, another price needs to be hit. So we'll get into that more as we go through the sheet. But just know that two things are going on here. There's reality, what we would actually do, but then what we need to happen from the perspective of our spreadsheet here and paper trading. So just starting up here, first point is the data. You only type in the areas with the light blue. So if you don't see light blue, don't touch it, don't type in it. So the date, we'll just say, here's the date, and then the stock, XYZ. I know these two things seem simple, but again, we're trying to figure out a strategy. We're trying to fine tune something. We're trying to just build confidence. And these little simple details like date and stock really go a long way, because when you're, what we're doing here is also building a trading journal. So when you're going back through the trading journal in your spreadsheet, you're saying, now, at what point in time was all this trade? What was I thinking here? Well, if you have the date up there, it's a lot easier to go back to that point in the chart and, relook at things. So simple details oftentimes make, the biggest difference. So get those simple details up there. Now here we get to reality and paper trading. So actually, let's take a step back. Over here, you have your commissions. So if you are trading stocks, we'll just go with one of these ridiculous ones that, $9.99 per trade. Now, if you're an options trader, that would be where you put your base fee. And, some stock brokers offer the per share commission. So that's where you would put that. So that number would obviously be 0. Then you just have per share. And then for, again, option traders, this would be your per contract fee. So for whatever you're paying per contract. So we got our fees in order, and I do want to at least start this off. Notice what happens immediately. We always start off in the hole. There's the first thing that you have to realize is the way the spreadsheet, you can see it's already calculating. As soon as we buy in, we're in the hole, because right on the buy, we have that commission. So if your commissions are at $9.99, you're in the hole, $9.99 right off the get-go. So there's the first little example of do your research on brokers, find somebody that's cheap, because the lower you can get that number down, the lower you're going to start off in the hole. So keep that in mind. That's the reality of the situation right there. $9.99, our loss right off the bat. We are starting behind because of commissions. Now there's no way around that. Commissions are just part of the game, but let that serve as some motivation to really go out there and figure out a broker that offers friendly commission. So get into the spreadsheet here. Now, reality and paper trading. So we're looking at a chart. We're looking at a setup, and you say, you know what? Based off this system or strategy, I would get in at that point. So let's just say that point is $10.05. Now, in order for you to allow yourself to say, okay, I got in at 10.05, the price has to hit 10. Now, why are we doing that? Well, this is where things get too distorted, where people are too, quote unquote, nice to themselves and make too many favorable assumptions. In reality, the price may go down there and just tap 10.05 for maybe like 50 shares. But then people say, oh, okay, I got all my shares. When if this was the real thing, maybe you would have gotten a partial fill, maybe you wouldn't have gotten anything at all. But by allowing it to drop below, then okay, it's a pretty safe assumption that if you wanted in at 10.05 and the share price actually went down to $10, then yeah, I think 10.05 you would have probably gotten in. Perfect. So yes, there's a first distinction there. In order for you to be considered in, and in order for the spreadsheet to consider that you're in, the price needs to hit $10. Now, all the calculations are being based off of 10.05. They're not being based off of $10. Let me say that again. All the calculations on the spreadsheet are being based off an entry point of 10.05, not $10. But the price has to hit $10 in order for you to be considered in. Do you see how that's turned against us? You might say, "Oh, I don't like this. That's too why are you tilting things against us like that?" Exactly. We got to make our lives difficult. So the question becomes, did you get filled or not? If you did, click 1. If you don't, click 0. So in this case, we'll say that, yeah, you do get in. So now you're into the trade. Well, how many shares are you in? For this, let's just say we're in for 500 shares. So now you can see over here, this auto populates. We have 500 shares left, in our trade. So back here, or on the date here, let's just say on the same day, you're saying, you know what? Based off of what my chart setup is seeing, I would like to, sell some shares. I'd like to lock in some profits at, let's just say, $10.20. Now, in order for you to be able to say, again, over here is filled. So in order for you to say, yes, I got filled, I was able to sell shares, the price is going to have to hit 1023. Again, do you notice how we're making our lives difficult? In order to say that we sold for profit, the price actually needs to hit $10.23. Again, in order to sell, in order for the spreadsheet to be able to say, yeah, you sold at 1020, the price, when you're watching the action, actually needs to have hit $10.23. But we're only getting credited for $10.20. Again, the virtual trading stuff, if it just taps 1020, and it could, maybe there's literally like 10 shares that are sold there, it would automatically say, okay, yep, you're sold. Yep, you're all out. That's not how it works. You may not have gotten out of any shares there. So we need to make sure that it actually goes beyond where you'd want to sell to ensure that, okay, yeah, you probably would have definitely gotten and sold at $10.20 if the price actually went up to $10.23. So your reality, what you want, what you would want to do at 1020, price needs to hit 1023. So in order to say you got filled, as long as if the price does go up there and hit 1023 or 1024, now what number should you use? What kind of fudge factor? That's up to you. Obviously, if you go 1040, that's making your life way too difficult. That's unrealistic. It's going to vary. Now if you're talking about a $300 stock, then yeah, 25, 30, 40 cents makes sense. But when we're talking about a $10 stock, a few cents, that's all you need to do. If you're talking about a stock that's $1.50, really a penny, a couple pennies is going to do. But for a $10 stock, that's way too much. But 1023, 1024, 1025, I'd say is probably even a little bit too much too. But point is, it needs to be up now. 1021, that's a little too easy. 1022, okay, that's fine. But for me, I think 1023 is a good little sweet spot there. So if the price does hit 1023, all right, you are in. Now, how many shares? Let's just say you're at that point you're looking to sell 200 shares. At that point, you are now at 20. You made $20.01 on that transaction. Now down here, you're thinking, wait, I just made 20 bucks. How am I only up $10? Well, remember, we have these commissions that are being factored in. So at least you're out of the hole now, but that's why, the commissions there are going to add up. Now, let's say maybe this is a swing trade. So you're looking to sell the next day. And you want to, next exit point, you want to be at, let's just say 1037. Well, remember, the price needs to go up beyond that. So in order to say that we actually did sell at 1037, we're going to need the price to hit 1040. Again, let's make our lives difficult. But let's say in this situation, nope, you didn't get filled. And at this point, we're looking to sell just 100 shares at that time. We have 300 left. We want to sell another 100. But at this point in time, let's say, nope, it didn't quite get filled. So you type that in, nothing happened. That's just telling the spreadsheet, okay, you didn't make any gains or losses because just simply nothing happened. But over here, it's very important. Maybe got knocked down by, the 50 SMA on 5 minutes. I don't know, and I'm just totally making this out. Maybe that'll help you out. But point being, take advantage. Remember, we're trying to do a trading journal. And, keep in mind about, what's going on and what sort of notes you kind of notice about. Maybe why didn't it get filled? Was it close? Was it not even close? Did something knock it down before the price got there? I mean, just write down your observations. And that way, when you go back to it, again, you can go back on the date, look at the chart, and then see what was in your mind. A common pitfall, especially for me, is, I'll remember. And then, 5 minutes later, wait, what? How was it? What? And then it's amazing how quick your mind can forget stuff. So write stuff down, notes, comments, thoughts, all that stuff. Use this area over here. It can be very helpful. So let's say another day goes by. And you're thinking, all right, I want to revise this down. Let's say I just want to try to get out at 1032 at this point. So again, we got to make our lives difficult. Well, in order to get out at 1032, we actually need the price to hit 1035. And in this case, we're still looking to sell those 100 shares. And yeah, this time it does work out. So there we made some money there. Made $17. You can see where our gains are at. Again, they're not going to be corresponding exactly because we have those commissions that are being factored in here. So again, let's say, and keep in mind, we now have 200 shares left. Hopefully that makes sense. We sold 200 here. We tried to sell 100 there, but remember, we did not get filled. Then we tried again for 100. We did get filled. That's why we typed 1. So, 200 plus 100 is 300. And, obviously after you take that out of 500, hopefully everybody can follow that math. We have 200 shares left. And then let's just say the next day we get We want to sell at 10.50. So in order to do that, well, the price action needs to hit 10.53, and we do get filled there. And this is for another 100 shares. So there we go, make some more money on that. We're up to $62 on the trade. And then finally the next day, we'll say we get, at this point you should have a stop loss in. If you're running and testing a strategy that doesn't have a stop loss, then you have a severe problem. You better have a stop loss in. So let's say eventually at some point it's moving up, but you don't want to just sell for the sake of selling. You want to get stopped out. So eventually, let's just say you end up getting out at 10.62. So that was your exit. Exit. Now, why are these both the same? Well, it's a stop loss. You know what that is. So if it gets hit, then you're out. So at that level, it is what it is at that point. If the price drops back down and hits it, you're out. And that would have just been for your final 100 shares. So there is what you made. You have 0 shares left. And at this point, you know, hit my trailing stop loss, which was put at, I don't know, 1% of the current price. And that, who knows, that might not make any sense. Point being, take some notes. Okay, why did you finally get out? Well, it hit your stop loss or trailing stop or whatever, and you're out. So there's your gain, and that does factor in commissions. Let's just toy this. Let's say you can get this down to 695, so 109.05. What would be the difference if? Notice how much your gains went up? Not a whole lot, but you do this over and over and over again throughout the course of a week, a month, a year. It's amazing how much, you know, even just a $3 difference could make. Now, a couple other notes. If you are doing options, then, you know, the numbers that show up in this column, just remember you can just multiply that kind of in your head by 100, and that's the actual amount you're making. That's just you know, standard option stuff there. Each contract is 100 shares, so just multiply that by 100. No need to explain that. If you're trading options, you should understand the importance of that 100 number. And then also down here, if you are shorting, if this number is negative, that is a good thing, because the way the math is working, you will get negative numbers. But when you're shorting, negative numbers are good, because that would imply that you're in the profit and the price is going downwards, which is how you're making money. You can see this here. You know, I just got, so you could start all over again. New date, new stock. If you do run out of room, then you can always just take this, copy it, move it down, and then you're just going to want to right click and then just do that first one, paste it, and then right here you have a whole new data set. And then finally, actually, let me move the spreadsheet up some so you can see it. You know, you can name these. I don't know. You could name them by a strategy. You can name them by a date. Maybe you're trying the Billy Bob strategy. I don't know. And I'm just totally making Billy Bob strategy. And then you could go and rename this one something else if you wanted to. Again, there's nothing on this spreadsheet or on that tab, but that's really just as easy as, you know, you coming over here, copying, coming over this one, and then you can just, again, that first one right there. Have to readjust the columns a little bit, but easiest way I'd probably do it is just you know, use this one here. But you can get as fancy with it as you want. The main theme here that I'm trying to get across is making our lives difficult. Understanding that there is a difference, and there needs to be a difference tilted against us from reality and actual paper trading. So when you're buying, price needs to actually go lower than what you would want to get in at. When you're selling, the price actually needs to go higher than what you would actually want to sell at in order to get credit for the sell. So if there are any other questions on this, you know, you can let me know. But like I said, we need to make our lives difficult. The more difficult I get going into real trading, the higher likelihood we have of actually turning profit, because I see it time and time again. I'm losing money. You know, I was making money when I was paper trading, but then as soon as I go to real money, I'm losing money. Maybe you can relate to this. Well, my guess is it's because you made your life way, way, way too easy in the world of paper trading when it comes to all this sort of stuff. So yes, it's going to be more difficult to make money, but that's just the point of it. So keep that in mind.
So as I noted in the video, you can click on the screen right now, and that's going to take you to the place that you can find this spreadsheet and get that emailed to you. You can also click down below if you're watching this on my site or YouTube, and again, that link will take you to the location where you can sign up to have this spreadsheet emailed to you, and that way you can leverage things against you, make your life a little bit more difficult. But as I've said, paper trading, the pitfall, the dangerous part about it is, you can exaggerate things in your favor, and that's the exact opposite of what we want to do, because when you go with real money, it's still not going to be the same as paper trading. That's why we need to make paper trading as difficult as possible, and that's what that spreadsheet is designed to do. If you have any questions or comments, please leave those down below. If you enjoyed the video and find videos like this and tools like this helpful, please click the like button if you're watching this on YouTube, or click the share button if you're watching this on my site, claytrader.com. And I like to hear feedback on whether or not this is worth your time, or if I'm just quite frankly wasting my time. So feedback is definitely appreciated. Thanks for watching. Get out there, be realistic in your paper trading, and trade without emotion.